Hello, it is the 3rd of February, and a nice little gain today. And what's interesting when we take a look at this is we see the same pattern all day. We ended up having sideways correction, up move, sideways, up move, sideways, up move, sideways, up move, long sideways, up move, and it ended the day with the sideways consolidation. When a break of a trend line happens, I state one of three things: reversal of trend towards the opposite direction, or it's a trap, or it can range or be a rate of ascent descent that changes. When we take a look at this trend line today, obviously it broke and it was used as resistance. It obviously was not a directional switch because it didn't go lower. And it could still be that of a trap, but it looks more towards the line of how the rate of ascent slowed down for the day, and really that can be very normal. And within the 15-minute time frame, the 50-day moving average, I thought that was pretty interesting. It was resistance for just a little while. It did also manage to come down to this 5-day moving average this morning. Actually, it was there by a penny after it was resistance with the volume weighted average price at 20-day moving average, came back down for a little bit of support, and then managed to break through. So now we see the 20-day moving average is flattened out. This volume weighted average has also flattened out. So that is definitely on the bullish end. And now we can start talking about some Fibonacci levels. If we take a look at the lows of 2630 and the highs of 3128, then that gives us an exponential level 2927, which works out to 2938 on a linear level. Okay, so now we're going to switch this up to the daily term time frame, and can you see the failed move, or where its direction is from? As 28 was a big level of support. I don't know if I need to draw the line in here. There already is one on here, but I will anyway. It was resistance, support, support, had a small bounce from that, fell through it with resistance in here, and now it's using that area of support. Therefore, the failed move looks to be this move in here, the break below 28. And really what this entire thing to me looks like is that this is a market correcting through time with that of a bear trap. And if this is a bear trap, failed moves can create fast moves in the opposite direction. The fast moves should come up towards the top end of this range, roughly towards the 31 level. But then again, if it doesn't manage to get above this area, then the failed move would be the breakout of the 28 level, which is supposed to be resistance, moving towards the way down. One final note is a trend line, the key trend line that was used for the rally. We'll just use something like this. If we move this over, well then this is most likely the rate of ascent I will be using for the trend line towards the upside. Take care.